Okay, I'd like to call this pension board meeting to order. If everyone would please rise for the Pledge of Allegiance. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Okay, may I have a motion to approve the minutes from the last pension board meeting on Wednesday, December 20th, 2023?
Motion.
Is there a second?
Second.
On the question? All those in favor signify by saying aye.
Aye.
Opposed? The ayes have it, and the minutes have been approved. Opportunity for the public to address the board on agenda items only. Okay. Seeing that there is no one, we'll move on to the business portion of the meeting. Motion 24-5006. May I have a motion to follow Robert's Rules of Order?
So moved.
Is there a second?
Second.
Commissioner, just briefly on that, because this is our initial organizational meeting, we have to adopt Robert's Rules of Order for the year.
Okay.
And under the pension code, the chairman of the Board of Commissioners is automatically the chairman of the pension board, so we don't need to elect an officer for that. Okay.
I'm honored. Thanks. On the question? All those in favor of the motion signify by saying aye.
Aye.
Aye. Opposed? The ayes have it, and the motion has been approved. 24-5003, the C.S. McKee Performance Report. May I have a motion to approve?
Motion.
Is there a second? Question, we have Mark Gensheimer here, the president of CS McKee, who is going to inform us of the report.
Sure. Well, it's good to see everybody. And I actually brought a cheat sheet for the first time so we get this every week, and it's probably way too much information. But I'll use a few of the slides, and it's what I pull information from. So it's what our fixed income and equity portfolio managers use every week. And there's so much information. It touches on everything related to the international and domestic equity markets, fixed income, interest rates, yield curve, consumer sentiment, even weather, if there's crazy weather that affecting the markets. So they use this report. It comes out every Monday morning. They use this report for all their hourly, daily, weekly conversations when they're making decisions for our clients. So I'm just going to refer to a few of these, and if you ever want a copy of it, let me know. But first, we actually hit a really great asset milestone at the end of the quarter. I remember right before Ed retired, he was really hoping that the portfolio would get to $200 million. I think we got to 199.5, but we did go over. We got to like 208 million at the end of the quarter, and I remember when the plan was probably like 52 million. So it's really been quite a run, and for the quarter. On this report, the markets were really strong again. Domestic equities were up just for the quarter over 10%. Your portfolio was up 10.53. For the 1 year, domestic equities were up 28%, and the whole portfolio was up 16.3. I mean, if we take these years as gifts with this kind of a portfolio. The only asset allocation decision with the equity markets going up as much as they did, we took a little bit off the table. We took 2% from domestic equities and put it into fixed income just to rebalance the portfolio a little bit, and it actually worked to our favor. Those are long-term moves that we made, but probably a week after we made that move, the markets dropped pretty, not significantly, but somewhat. So in this portfolio, our investment folks, as I was saying, use this as a summary. And I was just going to have you turn to just a couple pages. So this break-even inflation curve is the first one. It's about maybe 4 pages in. And basically break-even inflation is the difference between actual and predicted inflation. And most economic discussions today are around inflation. It's what everybody's talking about. Everybody's reading about it in the news. We think inflation is going to be probably a little bit sticky over the next few years. It's a lot easier. It's like losing weight. It's a lot easier, losing that first, 20 pounds, but those last two are pretty difficult. Last year inflation went from 9% down to 3%. We think getting it from 3 to 2, it's going to be a little bit tough. On the other hand, we got a good inflation number today. So we think we're going to have some volatility around inflation here for a while. Inflation, it ticked up a little bit primarily because oil prices had gone up. But now that oil prices are coming down a little bit, I just saw the headline today. I don't know exactly why inflation came down, but it's probably related to oil. So that's on inflation. If you turn just to the next page on interest rates, the Fed raised interest rates 11 times from March of 22 until July of last year. And they've been holding steady ever since. And they're holding steady because, they don't want to overheat things too much. The economy is doing, relatively well. Everybody expected earlier this year, our folks even, we expected 4 to 6 rate cuts for the year from the Fed. Now we're not sure if there's going to be any. With inflation improving a little bit today, it could, next quarter, next month, it could be different. We're probably expecting maybe one rate cut between now and year end. First quarter earnings were pretty good. If you turn a couple more pages, if you go to the global equities page, it's about 3 more pages down. This for investment nerds, this is a great page. It's got everything on here related to the equity markets that you could imagine. There's so much information on it. Like for example, if you look at the NASDAQ number, just two down, and you go all the way over to the price earnings ratios, you'll see that it's at 39.04. So that's a high number. So in red is bad. So that's why we're underweighting any of the tech names a little bit. It's not just from looking at this because we build a portfolio from bottom up, but it'll compare emerging markets versus EFA. It'll compare value versus growth. So if you look down where it's to the comparisons section, 2 down, you'll see value versus growth. And if you go over to the 1 year, what that 16.92 means is that value stocks have underperformed growth stocks by almost 17% for the last year. Now that's coming down. You're all familiar with the Mag 7 that drove the market for the last, it's NVIDIA, Meta, Tesla, Amazon, Alphabet, Microsoft, and Apple. Those companies have driven the market for the last 2 or 3 years, particularly like NVIDIA. We own 5 of the 7 in your portfolio. A couple of them, in fact, we just added Amazon for the first time about maybe 2 or 3 weeks ago. And it's finally screened well. It had been really, really expensive. It's dropped down in price. So we actually added to your portfolio. We don't own Tesla. We just, it's an interesting company, but without earnings, we don't think it belongs to anybody's portfolio. Maybe personally, but not in a pension fund. But the market is definitely broadening out. We're starting to see non-tech company names that are starting to outperform, which we really like to see. And frankly, it's one reason why we've been outperforming the benchmarks for a couple years now here. It's because that market is broadening out, and a lot of the retail names like Dick's Sporting Goods are starting to perform really well. Some of the oil stocks are starting to perform really well, like Marathon Oil, Dell Computer, some of the larger holdings that we have in the portfolio. So that's all good. On the other hand, we see a lot of positives. On the other hand, consumer sentiment and the labor numbers are recently, a bit down. So it's another reason why the Fed may choose to cut rates where we're just not, nobody knows. I don't think the Fed even knows at this point. I don't think they know till they get together. And, so with interest rates rising a little bit in the quarter, fixed income returns were pretty much flat for the quarter, up about 3% for the year. We do expect your fixed income portfolio, which is a very, very conservative portfolio, probably to return somewhere between 3 and 4.5% for the year. 2 years ago, when interest rates went up as much as they did, I think we had the first bear market in bonds since like 1981. So we had a 40-year bull market in bonds. And then we all took it on the chin because rates went from basically 0 to about 5% in a year. And that was a really tough year. And people are, they are complaining about, interest rates right now and mortgage rates. My first mortgage was 12.5%. And I thought I got a good deal. Interest rates now, we have 4 daughters who are all in their 30s, and they're all trying to buy homes, and it's, they're complaining about, 7.5% and 8% mortgage rates, which I get, but it's also coming from 3%. I think these more normalized rates are, if we could bring those mortgage rates down maybe a couple percent, I think it would be a real positive for all of us and for the country.
The house was 150,000, now there's 700.
That's exactly true, yeah.
Hard to make that payment.
It really is, yeah. Our first house, we bought it for $71,000, and our daughter Hannah bought a 800 square foot house in Southern California for $550,000. When she said it was 800 square feet, I said to my wife, I said, she doesn't know square feet. It can't be that small. And then we pulled in the driveway a couple months later. It was smaller than that. It was really crazy. But the international markets continued. They underperformed domestic, but the domestic numbers were so great. But international markets are also continuing to improve. We can continue to be positive across the board on equities. In general, we expect, continued positive returns from here. It's not going to be a straight line. There's going to be volatility. But with the portfolio that you have, made up of, primarily blue chip stocks, even in the small cap world, international, the majority of your bond portfolio are government agency securities. And we take advantage of a lot of volatility in the government agency security. We even own some brokered CDs for you that will pay 5.5%, 6% at times from organizations like Goldman Sachs and Barclays and some others. And don't ask me why, but typically in an election year, markets are strong. And we're in an election year. It's going to be interesting. It's going to be volatile, but we do think we're going to continue to go this way. It might be like this, but we're going to continue to be, up because it's all about earnings in companies. And when earnings continue to be relatively strong, the markets are going to go up. And you have all this other noise out there, all this geopolitical horrible issues going on, political issues in our own country, a lot of weather-related things. But if companies continue to make money, they will live through the volatility. And if you have a really well-balanced asset allocation and just stick with it, which we've done. I remember being here in 2008 and 2009, and it was scary back then, when the markets were down 35, 40%. And we just continue to reallocate. And if you just, stick to your guns, you'll get those 7.5% to 8% returns that you need, to continue to pay your retirees. So, anyways, we're relatively positive.
Mark, which besides Tesla, which of the Magnificent Seven stocks?
Yeah, so the mags.
Do you not own?
Yeah, so the only other that we don't own is NVIDIA.
Okay.
Yeah, and we just don't own it because we think it's too expensive. I mean, it's up 300-some%, and we always felt that it was always too expensive.
Yeah.
So there'll probably be a pretty good correction in it. I wish I owned it. Or wish I had owned it, I should say,
Yeah, right.
not now. Same thing with Tesla. I mean, I wish I'd owned Tesla, but I don't, that's all marketing.
Yeah. Any other questions for Mark? Okay. All those in favor of approving the performance report signify by saying aye.
Aye.
Aye. Opposed? The ayes have it, and the report has been approved. Opportunity for the public to address the board. Members, other business. Does anyone have anything they'd like to discuss? Okay. May I have a motion to adjourn?
So moved.
Is there a second?
Second.
All those in favor signify by saying aye.
Aye.
Aye. Opposed? The ayes have it, and the meeting is adjourned. Thank you very much.
Thank you.